on to one very important session. This is our last session for the day, but it's an important session. It's Grey Rhino lessons for the wealth practitioners. It's about grey rhinos, but we are not going to Africa or South Africa. We are actually going to look at the risks that are presented as grey rhino risks. But let me, leave that to a very senior person who's going to moderate this session, Ms. Punita Kumar Sinha. Punita is a distinguished member of our community here. She is the managing partner of Pacific Paradigm Advisors, an independent advisory and management firm, which she founded after Blackstone, where she was a senior managing director. Punita is also currently the chairperson of Incred Asset Management. She serves as an independent director of several big listed companies. You might have attended her very nice webinar she did on boards quite recently. Importantly, Punita is a charter holder, as many of you know, and she's also serving as a governor on CFA Institute's board. And she currently sits on CFA Institute's investment committee. Punita has a PhD and a master's in finance from the Wharton School. She has a chemical engineering degree with distinction from the Indian Institute of Technology, New Delhi. I cannot see, I do not remember, such a star-sprinkled bio that I last saw. Punita, over to you.
Thank you, Srinivas. Good evening, everyone. Today in our final session, we have with us Michele Wucker, strategy advisor and founder of the firm Grey Rhino and Company. Michele coined the term Grey Rhino to draw attention to and help us understand the highly probable, high-impact risks that everyone hates to admit we neglect. She introduced Grey Rhino theory at the World Economic Forum's 2013 annual meeting in Davos, and then developed into the influential international bestseller, The Grey Rhino. That's her book. How to recognize and act on the obvious dangers we ignore. The timely metaphor has moved markets, shaped financial policies, and made headlines around the world, especially as a metaphor for the ignored warnings that led to the COVID-19 pandemic. Michele's 2019 TED Talk has attracted well over 2 million views. She's the author of 4 books, including the global bestseller, The Grey Rhino, How to Recognize and Act on the Obvious Dangers We Ignore. Michele has 3 decades of experience in financial media and think tank management, turnarounds, and economic policy analysis. She's been recognized as a young global leader of the World Economic Forum, a Guggenheim Fellow, amongst other honors. Before I turn over to Michele, I just wanted to thank her for having us speak with her at the CFA India Society. What a time. We are in the middle of a pandemic. The lockdowns have just ended, but the financial markets are reaching record highs. So are there a lot of grey rhinos facing us right now? Before we get into specifics, I think it'll benefit our audience if Michele defines for us what is a grey rhino.
Sure. The grey rhino is the big scary thing that's coming at you. I often ask people to picture the rhino on the road ahead of you. It's maybe pawing the ground, snorting, stomping, and getting ready to charge right at you. It's gray because there are actually rhino species called black rhinos and white rhinos, and neither one of them is actually that color. They're all gray, but we don't talk about the obvious thing. And although I use this image so often of the rhino that's right in front of you on the road, it's not necessarily right in front of you. It might be off on the horizon. The first time I went on safari, I was surprised at how hard it was to see something that's 2 tons if it's off on the hill, but it's still dangerous. So it's really a metaphor for the things that we ignore that we shouldn't be ignoring. It's sort of a cousin to the elephant in the room, but by definition, the elephant in the room just stands there and nobody says anything and nobody does anything. And I felt we needed something much more dynamic to attract our attention to the things we don't want to admit that we don't pay attention to. And it's, of course, it's also a counterpart to the black swan, the thing that is so highly improbable, unforeseeable that you can't even let it pop into your brain. And while it's good to realize that you need to watch out more for the unexpected. If you can't see what it looks like, it's kind of hard to do anything about. So the gray rhino gives us a lot more power, a lot more accountability, and it creates an emotional connection really with the things that we don't want to deal with. And after so many years as a financial journalist, as a think tank executive working with policy, I've learned that policy and investing and decisions are not just about facts, although I love facts, don't get me wrong, but they're also really very much about emotion. And the gray rhino tries to bring that aspect into how we think about the decisions that we make and about the big scary things that are coming right at us.
So Michele, you mentioned the black swan, and the gray rhino is different than a black swan. So the black swan in your book, you said, is an unknown unknown, and the gray rhino is an unknown known. So I'm going to ask you about a few potential risks and see whether you classify them as a gray rhino or a black swan. First one, nuclear missile fired by North Korea.
It's a big one, and I do want to give a caveat before I answer, is that in many times you can really only tell the difference in hindsight, because if you can identify it ahead of time, then it's a gray rhino. It's not a black swan. The black swan, by definition, is something you can only see in the rear view mirror and not through the dashboard. So obviously the possibility of nuclear missiles being fired from North Korea is a serious one. I gave a speech in Seoul in fall of 2017 when all the chest thumping was going on, and I remember them writing a force majeure contract into my speaking contract, and it was pretty obvious to me as to why that was. So it's definitely an obvious thing. When we're classifying gray rhinos, I ask people to look at, how probable is it, knowing that there are a lot of flaws in our ability to predict exactly how probable something is. But if we can see it in front of us, it's definitely gray rhino.
Okay, then what about the rise of China and the renminbi as a reserve currency displacing the US dollar?
It's such an interesting, multifaceted question. One of the points that I make about gray rhinos is that they're often value neutral. It's a big, scary thing coming at you, but it might be good for one person. It might not be for someone else. It very much depends on your perspective. In terms of the dollar itself, I look at the fiscal policy in the United States, the quantitative easing, the failure to address serious financial fragilities, debt issues, inequality, the fact that the real economy is being siphoned off into financial markets, which are just a giant big casino bubble. And for me, that's the biggest concern about the dollar. In terms of the rise of the renminbi, there's so many factors and so many trade-offs that go into that in some ways it's many gray rhino questions for China to be asking, and they're very, very astute financially, looking very closely at the pros and cons of different things. But in the United States, you hear for so long, well, there's no competition to the US dollar, so we don't really need to worry about it. But you look at the huge rise of cryptocurrencies in the last years, you look at all of the worries about the dollar, about US financial and monetary policy, and to not be worried that there may be some tectonic shifts in how we look at reserve currencies, how we look at the international financial system, I think would be a little Pollyanna-ish. And so I think in some cases, the question of dollar versus renminbi doesn't necessarily capture the complexity of the issues that we're facing.
So another one which is related to India, what about a nuclear war between India and Pakistan? Both of them are nuclear countries in terms of having nuclear weapons. There hasn't been such a war yet, but there is worry out there. What would you say that would be?
I think it's a very real worry, and the dynamic is fascinating. We see it with hurricanes, with other ongoing threats that at different times flare up and then fade away, flare up and fade away. And sometimes we're most likely to be off guard when we've had a bunch of near misses that never turn into anything. I was living in New York City when Hurricane Sandy hit. The year before, we'd had what was supposed to be Hurricane Irene, a big, scary one. And of course, it turned out to be a big nothing burger, as they like to say. And so when Sandy came, a lot of people were very, very suspicious. And so I think it's very important not to be too complacent about some of the things that are clear and present dangers that have been there for so long. Similarly, with viruses, Ebola, H1N1, there have been so many viruses that happen very, very regularly, but that turned out to be not so big a threat in other countries, turned out to be not nearly as global as COVID in nature. And to be honest, I think a lot of those near misses are part of why so many governments were so slow to respond to the coronavirus, is that we had too much experience with near misses, that we didn't take it as seriously as we should have. And I think that's very much the case with the India-Pakistan tensions. They might not be, stomping and snorting and charging right now, but it doesn't mean that you should ignore them.
Mm-hmm. So you mentioned the pandemic, and in your book also, that was a few years before the pandemic actually hit us, you did mention the pandemic a few times, and yet looks like no one really did anything about it. So would you call COVID-19 a gray rhino or a black swan? And also another huge pandemic, would you call that, that might come, would you call that a gray rhino or a black swan?
What's interesting, COVID-19 is a gray rhino really in two ways. Both as a long-term recurring rhino and as a near-term, because there are two sets of decisions. And of course, when we say nobody did anything about it, it's a bit of an exaggeration, because people had been talking and doing things about it. Bill Gates gave his very widely circulated, I think it was in 2015 TED Talk, which all my friends emailed me links to it as COVID started happening, saying, hey, there's a big pandemic coming and we're not prepared for it. World Health Organization had done a pandemic preparedness report, said, hey, we're not ready. Even the Trump administration last year had done a scenario planning exercise. Johns Hopkins University, national intelligence estimates, all kinds of things. So there were many, many warnings, many people trying to get us to do things, and they weren't. With healthcare in general, I think there's an even bigger gray rhino, in that one of the messages that came out during Ebola and other crises as well was that the best way to prevent these crises is to have a very, very good basic healthcare system. And, in Africa, you had people who couldn't get Tylenol, couldn't get the most basic healthcare. And, that hasn't been dealt with, hasn't been completely ignored, because there are many very dedicated people dealing with it. But we haven't gotten the results that we want. The second way in which COVID was a gray rhino was in the near-term version. We saw it coming out of China. I remember in late January even, we had 2 cases in Chicago very early on. And as it started accelerating, and then as we saw the huge explosion in India, and they were behind closed doors briefings of very high-level officials in the United States, where people were saying, hey, this could get away with us, calls for more personal protective equipment, all sorts of unheeded warnings. And those were not some sort of, regularly recurring long-term sort of threat that people pushed to the back of the agenda because they just thought there were many things going on. This was a clear and present danger that was right on the road in front of us, coming right our way. And there were so many failures, and we continue to see failures. And particularly in the United States, we see so much denial of the seriousness of the situation. So it's really 2 different varieties in my taxonomy of gray rhino. But definitely COVID-19 just really has, I think, struck a chord during this crisis because of how many warnings went unheeded, both from a long-term and a short-term perspective.
So you've also talked a lot in your book about why leaders fail to recognize gray rhinos, and even if they do recognize it, they don't really act on it. So perhaps using this pandemic as an example, you could tell us a little bit about why is it that leaders fail to do anything about, even though it was, as you said, a recognized gray rhino, right? People had identified it in the US, and yet they didn't do enough. And similarly, for most of the world, most leaders didn't do anything about it.
Well, the nutshell answer is that there are cognitive biases, psychological reasons why we don't deal with these gray rhinos. There are structural decision-making issues, there are resource constraints, and there are extremely perverse incentives. In the United States, we had lawmakers who were briefed behind closed doors about what was going on, and they went and, they sold stocks and then they bought telehealth stocks. All the while they were going back and telling their constituents, oh, nothing to worry about. And they thought they could get away with it. And in the court of public opinion, maybe not so much, but so far there haven't really been any consequences. So there are very twisted incentives for people to do the right thing or not. And that gets into what I call a meta gray rhino, a structural question about how we make decisions, how we hold people accountable, whether within our countries or within our governments. The other thing that it's important to recognize is that depending on where you are in the evolution of a gray rhino crisis, you're going to get different constraints and it's going to require different strategies for dealing with it. There's a 5-stage framework. It starts with denial. And once I realized denial was the first thing, I had to run out and get Elizabeth Kubler-Ross's work on death and dying and her 5 stages of grief. My 5 stages are somewhat inspired, but not exactly the same. So, denial's at the beginning where you say, no, this couldn't possibly happen. There's an element of manufactured denial, as we've seen with climate change, with tobacco, with other things where people have a very strong interest in other people not recognizing things. So they exploit that natural human defensive emotion. The second stage is muddling. It's where you come up with 1,000 reasons why you can't solve the problem, whether it's a no political will, no resources, no whatever. You're really focused on why you can't do anything, and you let those obstacles loom large. The third stage is diagnosing, and that's where you have a mindset shift from why we can't fix it to what does it take to fix it. And that's where you're really going into the nature of the problem. How big is it? How close is it? How fast is it running? How is it related to the other gray rhinos? The English language is such a wonderful thing in that the word crash is the zoologically correct word for a group of gray rhinos. And it couldn't be more apt when it comes to financial markets. But in many cases, one gray rhino might be something that you can do your best to solve, but unless you solve something further upstream, you can't fix it. There might be one further downstream that solving this issue fixes. There might be related things like, say, COVID-19 and pollution and emissions. There's research showing that people in highly polluted areas have worse outcomes. And that's pretty clear when you've got respiratory stuff going on. Who has to make a decision? Who has the resources to do what, and how do you get them on board? The fourth stage is panic, or ideally urgency. And that's when everyone is running around like the Edvard Munch poster that I often use in presentations, the screen going, somebody do something, anyone, something, anything, just do something. And what's interesting about the panic stage is you either get people who are paralyzed, or you're much more likely to get people to do something, but it's often the wrong thing. Economic cycles, very, very good example of this. You see this sort of hysteria in a market bubble, in a boom, where people are just buying more and more. They've got this whole fear of missing out feeling, even though it's clear that what goes up must come down. And so, governments open the purse strings and they inflate these bubbles further and further, when what they should be doing is using that time to pay down debt and to invest in things, invest in infrastructure, things that are falling down. But what happens is once things start going down, everybody pulls in their belt. It shrinks the economy. It increases the severity of the recession or even depression. We get these very pro-cyclical movements. So what you want to do is get to a stage of urgency before it turns to panic. And ideally, you've gone through the diagnosing stage and gotten there. I did a workshop with a trade group in San Francisco a couple of years ago. And one guy, we had breakout groups at different tables. And one guy raised his hand. He says, what if panic's the first stage because you've been in denial for so long that you just didn't even go through the rest of it? The goal of gray rhino thinking is to get people to avoid that situation happening because it too often does. And then the final stage is, of course, action. It usually starts with a few people, mavericks, positive change agents who are sometimes dedicating their whole life to a particular issue. My friend Mina Guli, who's worked on water issues, has done series of marathons all over the world, to the point where she actually broke her leg and had to cut the last series short in order to raise awareness about water scarcity. Or you look at the Gates Foundation, very, very laser focused on public health issues. So you've got the people who are doing things. The question is, how do you get more people behind them? How do you amplify their work and turn that into a movement? Then the other part is, how do you check what you're doing? How do you track it? There's so many times where people will say, okay, here's a gray rhino. Here's what I did. Okay, I did my thing. It's fixed. But they don't think to come back and say, did what I did work? You know, is it having the result that I want? Do I need to adjust things? Do I need to circle back in 6 months or a year or 5 years or whatever to make sure that things are still working? So the action stage is a very, very dynamic stage as well. And of course, for people who don't do any of these things, you get trampled. But I don't spend so much time on that because in most cases, I don't think that's where anyone wants to be, with the exception of there are some times where getting trampled is actually the right thing to do. If you've got an obsolete technology, if you've got a corporate system, a hierarchy management system, something that's just not working anymore, sometimes you've got to just let that go. And that's a very, very hard decision to make. But it goes back to what I was saying before about gray rhinos being value neutral. You know, are you ignoring the gray rhino that's going to destroy something, or are you ignoring the gray rhino that's going to create benefits? Kodak's one of my favorite examples. They invented a digital camera, and they were so worried about cannibalizing existing business that they completely ignored the power of this gray rhino to create a whole new area of business, and it did not work out well for them.
Yeah, all very valid stages of dealing with issues that I think all our, we all face them in our personal life all the time. But since this audience is very much financial profession audience, I thought we could talk a little bit about the gray rhinos facing the financial markets. And often it seems like we, trying to deal with one gray rhino, we create another. So I'm wondering, in trying to deal with the pandemic and giving all this fiscal stimulus, keeping interest rates so low, have we created another gray rhino for financial market stability, rising inflation, asset bubbles long term? Is there another financial crisis coming that could be classified as a gray rhino?
Absolutely. I worry very much about that. The immediate concern is much bigger than just the fiscal stimulus or the debt or the low interest rates. But there are things that we could do to offset the unintended side effects of those and do it immediately. You hear all the time that central banks are worried that we're not creating inflation. Well, we have inflation right in front of us. It's called asset bubbles. And what's frightening about that to me is that the asset bubbles are based on the supposed underlying value of the companies and the economies that those companies are part of. And people are making very unrealistic assumptions about those, about how long it's going to take us to get out of this. But the other problem is that in many countries, tax incentives don't reflect the benefit to the economy of investing into real businesses versus investing in basically a casino. In the United States, for example, even with the corporate tax rate cut we had a couple years ago, if you are holding stocks for anything even remotely considered long-term, which is not very well defined here, over a year, you start getting a lower tax rate. But if you're holding your stocks long-term, you're actually getting much better tax treatment than businesses that are going and are so much harder to do. You've got to assemble the right skill set. You've got to put capital in the right places. You've got so many moving parts. You've got management issues. I mean, it's a lot harder, but in the end, it creates jobs. The businesses in the real economy are what make everybody better off. But in the United States, at least, and I'm sure other countries around the world have similar challenges, we're actually subsidizing people investing in a casino, and that's sucking money out of the real economy. And in the long run, that's not good for the casino either, because just like the Kingdom of Poyer, fake bonds scandal, or the Dutch tulip bubble, those are not sustainable. They are going to fall apart. And so when people are putting their money into the stock market, they're not putting it into businesses. They're not putting it into consumption. So it's an inequality issue. It's becoming much harder for the bottom 90% to be able to keep this economic machine going, and that worries me quite a bit. Because when you do stimulus, the people in the lower parts of the economy are the ones who are going to spend that money, who are going to keep the economy going. But if you're just subsidizing people to put money into the stock market, that's not going back into the economy. It's not creating jobs. It's not creating products. It's not adding to productivity. And there are things that we could do immediately with tax policies. There are things we could do immediately with trying to fix what they call the transmission mechanism in central bank wonk speak. How do you get the money into the hands of the people who are going to use it? We've made some progress during this crisis with what they call helicopter money, trying to get money directly to people in the population. But there's still a lot of people who are unbanked, who don't have access to the financial system. The stimulus that's going to corporations is still much bigger. The stimulus that's going to junk bonds, to highly indebted companies that a lot of the smartest people on Wall Street have been yelling about for quite some time. You're basically creating zombie companies that are not generating more profits than they are in interest payments. They're having to dip into their reserves or refinance in order to pay their interest. That's not how capitalism is supposed to work. So we've got some very, very serious structural issues. Yes, we need to make sure right now that we get through to the other side of this, but we need to be thinking right now about how to make the impact of that stimulus much more even, much more sustainable, and something that's going to make everybody better off in the economy in the long run, even the people who think that the best thing to do is to put money into the casino.
Mm-hmm. Well, of course, I'm sure a lot of the audience will probably say, well, we are investing in businesses. We help companies get the capital that they need to run their business. We've seen a lot of companies raising capital as the markets have gone up. So companies are getting money too, but I understand what you're saying, and I think it's very, very valid. Again, now thinking about India especially since this is a wealth management conference and we have a lot of wealth management professionals, you've done a lot of work and spoken to a lot of financial planners. What would you say are the gray rhinos that the wealth management professionals in India should be looking at, given what you've seen in the rest of the world or in the US?
Absolutely. And I'll give you sort of my top 3 global gray rhinos, but I wanted to first give a caveat that the gray rhino concept really works the best when everybody picks it for themselves, because everybody's going to see a gray rhino from a very, very different perspective. Everybody's going to have different information coming in. And what I really encourage people to do is look in front of you and say, hey, what's the gray rhino I see coming at me? What's my gray rhino? Whether it's an advisor asking their client to think about their personal finances, whether it's a portfolio manager looking at what to invest in. So with that caveat that I'm not the global gray rhino predictor, since it's impossible for any one person to do that, I see 3 big interconnected gray rhinos that were already there before the pandemic, and that the pandemic has sort of pulled back the curtain on and made worse. Every year I do a meta-analysis of a lot of the top risks, predictions, outlooks, forecast, everybody calls it different, across different industries, across different countries, and really try to get a sense of what people are worried about. And it's very interesting to see that what they're worried about doesn't always match to what policymakers or investors are doing to deal with those things. But I've seen a long thread of concerns that many of which map with my own concerns. And it's three different things. And again, I like to think of things in terms of a crash of gray rhinos, a group coming together. One is obviously this financial fragilities issue. We've got record debt, private, and all of a sudden a huge increase in government debt as well, much of it unsustainable. And those financial fragilities are going to come back and bite us. Those interact very closely with inequality issues for the reasons I mentioned, that these loose money policies are benefiting only the very top part of the population and not the people who keep the economy humming and growing. The third issue is climate change, which interacts with both of these. Over the past year, more and more investors and central banks, policymakers in the United States and other places in the world have been warning about climate risk and its impact on financial stability. Real estate markets, something like 70% of the world's population are in cities on coastal areas. You've got places like Florida or other places with large coastal areas. A lot of that real estate is getting premium. Has gotten premium prices for a very long time, but those coasts are eroding. You look at the predictions of rising sea levels, huge potential impact on that. Insurance companies are looking at this very worried that they are undercapitalized for the extent of the extreme weather events that we are predicting. And of course, a lot of the 2008 crisis had to do with AIG and other insurance companies not having enough money to make good on their obligations. And that turned into this huge, horrible domino effect. So the very close relationship between climate risk and the financial fragilities. And there's been a push for companies to disclose the climate risks, whether it's on their supply chains or their portfolios. Larry Fink's letter to BlackRock shareholders earlier this year got a lot of attention for pointing out, climate risk is investment risk. If part of your portfolio is invested in fossil fuel companies that are adding to the problem that real estate companies and financial institutions are having, why would you invest in something that's hurting the rest of your portfolio? It makes no sense. And then the other part of inequality is that the people who are affected most by climate change are the ones whose activities have contributed the least to it. And they're also the ones who are least able to invest in green technologies. They need to grow urgently, but if they grow the same way that the wealthy, earlier industrialized countries did, it's going to shoot emissions up and really follow a very bad example. So I think the countries that have benefited most from dirty investment have a responsibility to those countries as well. So really, in financial fragilities, inequality, and climate change, they're all very closely tied to each other, reinforce each other. But the flip side is, if we start addressing any of those, we've got a very strong possibility of creating a virtuous cycle. And that's really where I'm hoping to get people to go, to not just see the scary side of things, but to see what you can do with this. We're already seeing clean technologies creating more jobs, and in many cases being financially very competitive, in some cases, even better bets than the dirty fuels of the past. So we're going to see, I think, a lot of changes in all three of those areas, but there's still lots of people with entrenched interests in the status quo and keeping things the way they are. So hopefully the gray rhino will help to provide some of the momentum to deal with some of those issues.
Right. So the wealth managers have to do more responsible asset allocation when they advise their clients, right? So that all of these trends can generate positive outcomes. And another thing, of course, in your book, you've said that, and you mentioned today as well, is that a crisis can also create an opportunity, and or if there is an opportunity, that could also be a gray rhino. So I think maybe technology, the use of AI, and all of that is a gray rhino for the wealth management business, but that can also become an opportunity, right? That's what I would think that is a possibility.
Absolutely, on so many levels. And the thing about we get a lot of conversation here in the States about the rise of robo advisors, which on the one hand cut costs dramatically. They cut they cut the fees that you can charge for those services, but because the cost goes down, dramatically widens the market. And the other part about it is it also lowers the costs for financial advisors of doing their magic. And there will become a premium on the human element. And so the people who are going to succeed the most in the future are the ones who can use the robo advisors to be able to lower the entry barriers for many, many people, to broaden and widen the market dramatically. But on the other hand, on the premium side of the market, the people who understand some of the behavioral economics, the human science, the decision making, the attitudes towards risk are going to do so much better. It's been very interesting to me to see over the last several years the development of services that help you to assess not just the risk in the market, which is a much more subjective number than most people really want to recognize, but also help people to understand the risk attitudes of their clients, because everybody is so different. How much risk are clients willing to take? How much do they know about it? How does their amount of knowledge change the risks that they're willing to take or not? Oh, how do you think about different demographics? I've done a lot of work on gender and risk attitudes, and there have been companies that have been developed to help to better address the risk needs of women and try to counter some of these stereotypes. I hear all the time, oh, women are risk averse, but you look at the literature and it's actually not so true. In many cases, women are more risk savvy, more risk aware, make better risk decisions in the present. And if they look at past risk decisions to see how they did and learn from them, they actually make much better judgments. They get when they made a bad decision, when they didn't, which men don't always do. That women in a stressful situation are likely to outperform men. So that's going to be a very big and growing factor in financial advice. Understanding not just the risks that you're telling your client about, but understanding their internal risk attitudes. I call this a risk fingerprint that combines your innate personality with how you were raised, with the experiences that you have gone through, with the policy environment around you, the sort of social and government policy safety net that you have. All of those things go together to give a better idea of what your client is thinking about when they're thinking about risk, whether they're willing to make hard decisions or not. And so that's really, I think, the new frontier, along with the robo-advising side of things. So lots of changes, and some people thrive on change. A lot of people don't. I'm probably like a mix of the two, but definitely lots and lots of gray rhinos from technology for the financial management community, just as technology is changing the landscape of investment decisions, of companies that you're going to invest in, of the kind of jobs that are going to be out there. And that keeps changing as we learn more and more about AI and some of these new technologies. When I wrote The Gray Rhino, when I was finishing it up in 2015, it was already such a different world from what we see today. And that's going to continue to change. There are going to be lots and lots of uncertainties and new things that we're going to need to deal with as well, in thinking about if the jobs that people are going to have in the companies that are going to do well or not. So technology, just, you know, you can get started. We could talk all day about gray rhinos from technology.
Right, right. No, it's interesting you mentioned, in fact, that I was going to ask you that question about gender. You said women handle stress better, or stressful situations, they do better, but we have very few women in the financial world compared to, you know, the gender equality that we see in some other professions. And you've also talked about Lehman Sisters, that if Lehman Brothers was Lehman Sisters, perhaps the financial crisis may not have happened. But I'm going to ask you one last question before I turn it over to the audience. And that question goes to back to, you know, something about, you said about how decisions are made when people see gray rhinos and how do they deal with them. And there's a cultural element and leadership styles. And I mean, I think about India, I think the cultural style is very much respect for elders, conform to systems, don't question too much, don't stand out too much, it's not rewarded. So do you think that this kind of culture that we have in India would lead more to groupthink, and perhaps the leadership that is required to deal with gray rhinos requires a slightly different style?
Absolutely. And I know India has been aware of this problem with, you know, some of the change laws on women on boards and things like that. But it's very true. All the research shows that when you have a homogeneous group, when people look and think alike, they come from the same backgrounds, whether it's, you know, professionally or demographically or industry wise, they're much more likely to listen to whatever the first person at the table says and then just repeat it all around the table. And they're much more likely to ignore very, very serious warnings. And that needs a huge mindset shift, and a recognition that when you're saying something that's not expected, you're also creating opportunities that could be taken advantage of. There's a company here in Chicago that has a great tool for this called inclusion meeting cards, where they'll assign roles to people. Like somebody's role is to be the devil's advocate, you know, to come up with a contrarian view, and have people in the group switch that role, you know, even make a game about it. Make sure that the saying the unexpected or uncomfortable is part of your process. Normalize it. You know, on the other hand, there might be people who always say no matter what. Then you give them the angel's advocate card and say, you are required to say something good about this idea no matter what. And they've got all sorts of different cards. Some of them are for telling someone when they're, you know, they're mansplaining, you know, they're going on and on with claiming a level of expertise when the woman in the room probably has done a lot more work on that particular issue. There's a beating a dead horse card. So there are lots of habits that you can build into your decision-making process that will help you to make better decisions. The other thing you can think about is, what are the risk attitudes of the people in the room? There's a fantastic group in the UK called Psychological Consultancy that I profile in the book that I'm finishing up right now. And they've got this wonderful tool called the Risk Type Compass, which evaluates where you are on a very much compass-like scale of, you know, how anxious or calm are you in face of risks, and how impulsive or methodical are you in your response. And then also how close are you to either end of that spectrum, because people in the middle can play a very important role in trying to mediate between other people. They use it in boards often, and they said that in a board setting, it's very unusual that people with a similar risk type will end up sitting next to each other in the board. So make sure that your board or your team, whoever it is making decisions, has different points of view from a risk attitude perspective, which can add a lot of strength and richness to your decision making. Also, if everybody's a lawyer, if everybody's an engineer, if everybody's a doctor, they're all going to come up with similar answers to a problem. They're all going to have the same blind spots. So make sure that you've got different points of view. You know, bring in outside, you know, committee members or consultants or whatever. If you're not quite ready to have it on your full board, think about demographics. Say, a consumer company. If your target market is women in their 30s, how many of those do you have informing your decision-making process? So all of that goes to really understanding your market, really understanding the environment, but also an element that has just not gotten nearly enough attention is understanding your own biases and how those are shaping the decisions that you're making.
Yeah, in fact, there is a question from one of the audience saying, oh, so should men give up given women do better? And I think you've answered it, that it's not either or. You need people with different skills, different genders, different ethnic, to really have a diversity of thought.
Yeah, and I should actually add, you mentioned Christine Lagarde's wonderful quote about, if it had been Lehman Sisters. Yeah. I actually think the best would not necessarily even have been Lehman Sisters, but Lehman siblings, because a board that's all women can be just as dangerous as a board that's all men. Making sure that you've gotten the different perspectives, no matter what your mix is in the first place, is important.
So I'm going through the questions. One of the questions is related to, do you see cryptocurrency is a gray rhino for financial intermediaries like banks and others?
Absolutely. And with the caveat that I'm not a cryptocurrency expert by any means, but I know that the people in the cryptocurrency world, many of them see bad decision making around the existing official legacy currencies as a gray rhino. It goes to my point that a gray rhino is different depending on the point of view that you have. And I think that there are also gray rhinos within the whole cryptocurrency market. I mean, there's a lot of scams out there. There's a lot of breathlessness, but they also have a very, very clear concern, with the official currencies. And I don't know enough about that to sort it all out, but I'm sure that there are people out there who do. And for anyone like me who's not an expert in cryptocurrencies, it's a signal that you need to go find people who know what they're talking about. And that would include both cryptocurrency evangelists and skeptics. And it's very interesting to see that the central banks around the world are experimenting with some of their own digital currency versions. So they clearly see that as a gray rhino as well. So it's a great question. And I wish I had more personal knowledge of it. But anyway, as I said, it's impossible for any one person to go into that much depth on anything. And that's why it's so important for everybody to sort of own the gray rhino for themselves and really analyze the thing that's coming at them. And from the perspective, for someone who's an investor in cryptocurrencies, it could be a really great opportunity. For someone else, it could be something that's very scary.
And then there are several people who've asked, what are the 2 or 3 major gray rhinos that one should be worried about? And then the follow-up question to that is, if there is a gray rhino, then how do they deal with it? And another question is, in the US, this rising inequality and the resultant civil unrest, is that a gray rhino event? So if you could take a few of those.
Sure. Well, it's interesting that, the rising civil unrest in the United States, absolutely. We had a shooting last week in Kenosha, which is just a stone's throw from where I went to grade school, and very, very disturbing. I see it as part of the same social unrest gray rhino that led to the election of Donald Trump. What I found, my first book was called Why the Cocks Fight. And so all my friends would send me kitchen towels with roosters and all sorts of little rooster tchotchkes. And so the same thing happened with the rhino. And in the United States, there's a term Republican in name only, which is for the centrist Republicans. And so they send me all these emails when people were calling Trump a rhino. And I said, well, not necessarily a rhino, but definitely a gray rhino. But it's not just him. It's all the people behind him who are unhappy. Now, the Trump fans, blame it all on immigrants, on China, on other countries, on people who aren't white. The other side is the opposite.
Yeah, I'm really sorry, Michele and Purita. I've been reminded by my colleagues to they're the timekeepers that we are running very short of time. So in 30 seconds, would it be please possible? I'm really, really sorry for this, to summarize the response.
Sure. Well, anyway, short response is yes. Social unrest is a very, very big, big gray rhino, and I've forgotten the other questions already, but we don't have time for them anyway.
I think we do have a few minutes, right? Srinivas, have another 5 minutes?
So my colleagues are saying that there's a hard stop at 7:45. So maybe if you can take one more minute or so, I think that should be fine.
I think one important question that somebody's raised is that if you act too early, there is a cost. There's a cost of acting and there's a cost of not acting, and you can be too early or you can be a little late. So how, even if you identify a gray rhino, how should leaders and how should people deal in terms of managing the cost benefit analysis and dealing with them?
Such a great question, and timing is so important. I was very involved in some of the debates over like what Europe should do with its debt problems and with Greece and things like that. And at first I came in with a very American attitude, like, okay, let's rip the Band-Aid off, fix the problem right away. And as I talked to more European friends, I realized that they were really looking for, they understood that having the political will ingredient was so important. So I kind of mellowed out and looked at timing and came up with this concept of, strategic modeling. Do the diagnosing, make sure you've got your plan in place and have an idea in your head of what's the trigger for when you're going to act on something. And the other part of this is sort of fear of acting too early is that I found that many people see trying to avoid a risk as a big risk in and of itself, that they would rather do nothing like everybody else rather than try to do something and it be the wrong thing and get burned at the stake like Joan of Arc. So the timing question is very important. And just going back to the 5 stages that I mentioned, looking at where you are in the gray rhino stage, and these are developed further in the book, that helps you to understand what your strategy should be at that particular time. And actually your stakeholders may be in very, very different stages. Some might still be in denial. Some might be like acting and, wanting to do everything yesterday. So that stakeholder analysis and the chronological and, systemic analysis of the situation is very, very important. And to be honest, just the process of doing that analysis is going to make you feel that you've got more power to do something, because one of the big reasons that people don't act is that they feel powerless. And knowledge and just doing the homework can make a huge, huge, huge difference in that. Just the process of asking, what's my gray rhino and what am I doing about it, is so simple, but such a powerful tool. I use it every day in my own life.
No, that's great. I think that's actually a great concluding point. And I think in our last 1 minute, I wanted to first say thank you, Michele. It's been an honor to have you here and address our audience. And I think you're leaving them with a lot of food for thought as to how to deal with gray rhinos. But one final question that we haven't addressed and is that what is the biggest gray rhino facing the world right now? And if you could summarize with that.
So this is going to sound very meta, but it's the failure to recognize gray rhinos. It's, so many people who want to say, oh, there's a black swan, nobody saw it coming. This real helplessness and this real willingness to accept cop-outs by the people with the power to make those decisions. So really the biggest threat is that we haven't yet made the mindset shift that we need from this passivity and fatalism to active problem solving and demanding accountability.
And of course, for India, any gray rhino that India should be worried about?
So many of them. I follow a lot of what's been being written in India about gray rhinos. Water, huge one. We have the opposite problem here in Chicago, too much water, but very big problem around the world. Corruption, infrastructure issues. I've seen it applied to digital disruption, to the impact of digital toxicity on populations, this digital addiction, and even to specific companies and whether it's a succession challenge, whether it's a responding to industry changes. So many that I've seen people writing about already. But again, as I said before, the concept is most powerful when people own it for themselves. So the examples that I've given you are ones that are directly from what I heard in commentary in India about the gray rhino, which is, I think, the best place to start.
Okay, well, thank you. Thank you, Michele. It's been a pleasure to have you, an honor to have you. And to the audience, now that you have a lot of tools to think about gray rhinos, hopefully you'll all go back home, think about the gray rhinos facing India, the investment profession, and then try to figure out solutions to them. And so hopefully we will make our profession better and the world a better place. Thank you.
Thank you. Thank you very much, Michele. Thank you very much, Punita. It was a very powerful session, fantastic session.